What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Supermicro computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Friday, March 1st. Alright guys, a pretty nice day here for SMCI stock, up $49.58 a share, 6.07%. The stock is up about 14 points additionally after hours on top of those previously mentioned numbers. Listen, if you've been watching for any period of time, you know what I'm going to say. If you're new here, please subscribe to the channel. I'm trying to hit 3,000 by kind of like midnight tomorrow night. I think we can do it, but only with your help. So please hop aboard. Let's reach our goal here. As a bull, of course, I would prefer that the stock is up 14 points after hours rather than being flat or especially down. But as good as it feels to sit back and say this thing is just running, screaming toward 900 bucks a share, just take it with a little bit of a grain of salt. Volume is low. Okay, we have to consider that. Be mature about our analysis, but accept that, listen, 880 is currently the real price, of course, and I'd prefer to see that rather than flat. Just understanding that it's on low volume and stocks can get moved relatively easily in the after hours here. But let's take a look at this thing, because we were talking a lot yesterday about 800 bucks a share, and we treated that just like the trampoline that we were discussing. So let's start here on the 5-minute chart here and take a look, or really get into our daily volume profile analysis ritual here. Now remember, the name of the game here is time of day context. Is anything out of the ordinary that correlates with a particular move, out of the ordinary meaning based on time of day, that leads us to believe that a bigger sample size of the market agrees with one move over another? Well, let's take a look here. So you can see here this first candle after the close. We've been seeing that a lot lately. I wouldn't say that's so out of the ordinary, however, I'll take it. Off the open, you know, we did see a push immediately off the open that pushed almost to what ended up being the intraday high of around 890. And what's interesting is we typically do see a little bit more of a tank off on that second 5-minute candle, but we actually sustained pretty heavy volume on that push. I mean, about 400,000 shares per 5-minute bar, which on a $880 stock, I mean, that's decent, right? And we sustained that for about 10 minutes, and then of course, as soon as you start to pull back and consolidate, you know, the push gets a little bit less aggressive, and then you consolidate throughout the rest of the day, volume quickly tanks off. We saw a slight increase here on a small, tiny little red bar at the intraday high, but that big wick up top tells me that this, and the actual bar itself being kind of a small candle with a larger wick on top there, that leads me to believe that this was kind of a battle between buyers and sellers. Naturally, it's going to pump up the volume bar. So it's good. You know, I'm happy to see that we sustained that much volume off the open, but that's really all I can pull out of the 5 minutes. So let's move on. Levels that I'm watching tomorrow, of course, as always, starting with the 30-minute chart with the self-fulfilling prophecy, psychological levels of the most popular indicators that we can possibly put on a chart, the 200-period moving average and the 50-period moving average. Now, you guys remember yesterday we were talking about, you know, it'd be great here on the 30-minute to reclaim both the 50-period and the 200-period. Guess what we did? Guess what we did? We rip upside pre-market. Off the open, we rip up through the 200-period after claiming the 50-period. Hold both of them in regular trading hours. We get 3 tests of the 200-period. You could almost argue 4 here. Throughout the day, and boom, on decent volume, we hold it throughout the day. Now, granted, it's just one time frame. It's just the 30-minute chart. I think things get more and more contextual the longer time frame you go. But I mean, it's just by the book. This is textbook stuff here. It's beautiful to see if you're a bull. And it just goes to show yet again. I mean, listen, guys, you really think I sit here and look at these moving averages thinking that they're magic or they're tracking something that's not delayed? Of course not. The only reason I care at all is because they're self-fulfilling prophecies like we saw today. It's all psychology. That's it. Stick to the basics, especially when you start getting to longer-term time frames. Intraday scalping, like momentum scalping, the stuff that I do on a daily basis all day long, that's a little more intricate. But we're taking a look at the day-to-day, right? We need to look at what is the most obvious story. Using the most heavily used psychological indicators available, these are those, okay? And it's just clear. So a lot of times you'll hear people kind of talking down about TA because maybe they tried to trade it incredibly literally and lost, and they did it twice, and now they're like leaving the market, whatever, right? And you'll go online, you'll make some comment, and they'll say, you don't really believe in TA, do you? That kind of thing. I would not say I believe in TA, yet this entire channel is essentially technical analysis and options bias, or bias, volume bias, TA, right? The self-fulfilling prophecy analysis, psychology analysis, and options bias. So would I say that, oh, I believe in the moving averages so much? I wouldn't say that literally. I believe in the psychology. TA, when you are contextual about it, is simply the market's way of portraying the psychology on a stock. So yes, I believe in the TA by default because I heavily believe in the psychology of the market. That's how you should respond to those silly comments. All right, the 4-hour chart now. Let's take a look. That 50 period, that is incredible. I mean, we reclaimed it here today. We got up through on decent volume, right? We did reject at least this wick here on the higher volume, but we reclaimed it. Again, it's just one factor of many, and we closed above. We're holding above in the after hours as well. Beautiful thing to see. Just like, listen, tomorrow, all I'd like to see, if I'm a bull, a hold of both of those on the 30-minute, a hold of the 50 on the 4-hour, and if I'm a bear, I would obviously like to crack down on all three of the moving averages between the two time frames, right? The 50 period on the 4-hour and both on the 30-minute, ideally, because it's in, reasonable range on the 30-minute to crack downside through both of those. If you're a bear, I think it's pretty obvious that's what you'd be looking for. But not only that, it's not just like, okay, so if you're a bear, you'd like the stock to go down. No, not literally. You would like to see it crack downside on high volume and then ideally retest, for example, on the 4-hour, retest the 50 period and on high volume reject, right? So bulls, this is what you ideally would not necessarily want to see in the very short term. And, on the 30-minute, if you're a bear, ideally you'd like to crack downside below both of these, retest the 50, the lower of the two, on high volume and reject. Okay, it's a little bit more intricate, but still relatively simpler. That's really it here for the 4-hour chart. Let's move on to the most contextual of all, the one that paints the most obvious picture, which is the daily, and you know what I'm going to say here today. First of all, of course, it's the daily. It doesn't show after hours. The stock's at about 880 after hours, okay? If you showed this chart to anyone on the street who sort of knows what a stock candle looks like, what would they tell you is the level you should watch? I would say about $900 a share, right? I mean, some of them might say 1,000, but let's start first things first here. If I'm a bull heading into tomorrow and looking at the daily chart, which everyone's looking at the daily chart on top of the other time frames, a claim of $900 a share is just about the most powerful power move that you could possibly make when the stock dipped below 800 a day ago. Okay? A claim of $900 a share, a retest, and a hold as support on high volume is a power move on SMCI if we were to see that play out tomorrow. We could then look to potentially talk about using 900 as a trampoline to bounce up toward $1,000 a share, which I know a lot of bulls have their eye on, and you'd likely see some buying into that level. Now, bears, really simple. Any test of $900 a share, you want as high volume as a rejection as possible. Head down toward 8, because really, I think if you're a bear, your primary objective here in the near term is to crack downside below 800 on as much volume as possible. Now, the options bias. What were the options traders saying today? How are they positioning themselves heading into tomorrow? We had about 240,000 total contracts traded today, 136,000 calls, 104,000 puts. The short-term speculators actually leaning slightly to the put side. About 57,000 calls, about 67,000 puts, okay? But then look here, every other delta range, 21 to 40, 41 to 60, and on, all of them leaning to the call side. So it's only the extremely short term, on average, calls and puts that are leaning to the put side. You start getting a little bit less short term, more mid-term, longer term, right? And it all starts leaning to the call side here today on SMCI, which gives us a slightly bullish leaning overall call put ratio. Listen, if you're getting value out of these videos, again, please jump aboard, subscribe to the channel, help us reach 3,000 by It's a big goal, but 3,000 by midnight tomorrow, Friday night, Saturday morning, I suppose. I think we can pull it off. By the way, very recently added another benefit to all of the membership options, gold all the way through platinum. I'm now alerting in-play stocks. These are stocks that most momentum traders would be watching at the same time. That's how momentum traders typically work, because our scans are usually all kind of set up the same way, because those are the stocks that tend to have the most edge if they're traded properly with proper risk management. The scanners are expensive. Okay, most people don't have access to them, so I added on a benefit. I'm alerting them as they come in, as they fit my criteria, just so that our members can keep an eye on what momentum traders are watching, what's moving, what has a fresh news catalyst, and what has elevated relative volume. You can take a look at joining at that link in the pinned comment. Appreciate you guys, and I'll see you tomorrow.